Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. I want to thank the Golden Oracle of China, one of my subscribers. You guys can follow him on Twitter, on X. I'll leave the link again for you guys. He's an absolute gift to my channel, and he started his own Substack on X and on Reddit. And I can't say his name due to the job that he holds. I don't want to get him in trouble. But exactly what he said in this article is what I was saying 2 years ago. And I even showed clips of Mahubani, Kishore Mahubani, that professor from Singapore, and all that he was saying. Exactly what I've been talking about is coming to pass. Whilst the Western media was telling us that China is uninvestable, China's 1 trillion trade surplus isn't just a record. Yes, their 1 trillion trade surplus for the year thus far, whilst America is in a deficit, even with the tariffs that Trump put against China in the first administration. The Biden administration went along with that and increased it, and then Trump came and increased it even further. But even with that, China had a $1 trillion trade surplus. You heard that right. And I spoke about why that would happen with ASEAN, the BRICS nations, and I took a lot of heat for that. But anyway, it says the 1 trillion trade surplus isn't just a record, it's a tectonic shift in global liquidity. But here's the puzzle. If China's trade surplus is up over 20% year over year, why hasn't the yuan surged? In any free market economy, a surplus of this magnitude would have triggered sharp currency appreciation. Yet the US dollar CNY rate remains remarkably stable, hovering in its familiar band, seemingly unmoved by a flood of dollar inflows. For years, the answer has been buried under headlines calling China uninvestable. But the data tells a different story, one of monetary sovereignty, hidden liquidity, and structural strength. In this piece, we argue that this currency revaluation is inevitable. And by the way, most of the trade surplus came from the green energy sector and the EV industry. Wrap your heads around that. With it set to grow exponentially next year, with NEO planning to go globally and expand globally at an even faster pace. Wrap your heads around that. China's trade surplus from 200 billion to 1 trillion, the surplus that refuses to collapse. Every time the Western media says China's economy is spiraling downwards, for the last 5, 6, 8 years, China keeps growing. Even amid global slowdowns and geopolitical friction, China's surplus has grown relentlessly, reaching a historic 1 trillion in 2025, and the year isn't over. This isn't cynical, it's structural. China now dominates high-value exports, EVs, solar panels, batteries, and industrial automation. The surplus isn't a relic of cheap labor. It's the output of high-tech, export-integrated economy. This is expected to continue, particularly in the service-led economy via artificial intelligence, which they're also leading in. Alibaba Cloud growing 34% year over year. Yes, the same Alibaba that teamed up with NEO, the same Alibaba whose NEO is using their Quen in their AI models. In the latest quarterly earnings being a flashing example. And yet global investors have fled. MSCI China at its lowest weighing in a decade. Fund flows remain negative. Why? Because the uninvestable narrative drowned out the fundamentals. The hidden engine surplus liquidity re-rating, the $1 trillion surplus doesn't vanish. It funds gold reserves, reported or not. boosts corporate balance sheets, injects yuan liquidity into banks and markets, enables policy flexibility, no need for foreign borrowing, unlike America. And with less of that liquidity leaking into US treasuries and more staying onshore, the marginal yuan is finding its way into equities with a doubling effect, rising earnings, CNY stability and appreciation. Chart 2, stability by design, not default. The yuan has actually depreciated since its 2021 highs, but not because of weakness. Oh, no, no, no. Instead, the PBOC has allowed controlled weakening to absorb trade surplus pressures, shield exporters, and avoid disruptive volatility. The PBOC doesn't let markets clear. When exporters sell dollars for yuan, the central bank buys these dollars, injecting liquidity while capping CNY appreciation. And here's what few acknowledge. This has created arguably one of the largest asymmetrics in the global market. The undervaluation of the Chinese yuan relative to other currencies. The fact you can purchase goods for a fraction of the cost in the West isn't just due to China's high efficient production processes. It's also because the yuan remains artificially suppressed. This undervaluation acts as a silent subsidy to exporters and a hidden discount for investors to hold unhedged Chinese assets. In 2026, the PBOC ever chooses to let yuan reflect its true fundamental strength, backed by $1 trillion surplus and healthy gold reserves, the revolution could be swift and massive. Along with the BRICS nations releasing the digital currency that they are basically using right now and trying out. Imagine what's coming next year, guys. Chart 3, Treasury versus gold reserves. From treasuries to gold, the quiet buildup of monetary sovereignty. For over 2 decades, China's foreign exchange reserves followed a predictable script. Even dollars from exports parked them in US treasuries in order to keep the currency artificially low. As at its peaks in 2013, China held $1.32 trillion in US government debt, the largest foreign holder in the world, even though when politicians run here for office in America, they keep making you think that China is the enemy and they hate China. This wasn't just passive investing. It was a pillar of the past WTO global order, blinding China's success to US financial stability. But everything changed in February 2022 when Western nations froze $300 billion of Russia's FX reserves. Overnight, US treasuries went from risk-free to politically contingent. For Beijing, the lesson was clear. No amount of treasury ownership guarantees access in a crisis. Since then, China has executed a stealthy but deliberate pivot. US Treasuries holdings have fallen by over $550 billion to under $720 billion in 2025, a 15-year low. Official gold reserve has risen, but only modestly. From 2,010 tons December 2022 to 2,280 tons by 2025, a gain of just 270 tons. So I'm not going to go into the whole article, guys, but I'll put the link in the comment section for you guys to show you exactly what I said is happening and exactly what the analysts predicted is coming to pass. So imagine next year when the digital yuan is in full swing and they move completely away from the US dollar, and it's coming. What will happen to the American economy? It will be a massive flip. You're going to see American stocks, along with Chinese stocks, tank as the American economy crumbles. And then you'll see money pour into the Chinese economy and the Chinese stocks because they're trading with the rest of the world. They don't need the American economy. It has just been proven. They had a surplus while we had a deficit because they're trading with Africa, the Middle East, Latin America, ASEAN, and the rest of the world. The writing was on the wall. I hope you guys found this video yet again to be informational. inspirational and motivational. If so, guys, don't forget to hit that thumbs up. It takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.